Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys had a very nice weekend so far. Now, keep in mind, in today's video, all of the options plays are going to be for selling options, more specifically selling put options as part of the larger wheel strategy that I like to run on the channel. Why do I prefer selling puts as the bulk of my trading income? 3 very simple reasons. Number 1, if you're a beginner, it's very easy to learn, and it's also very scalable thereafter. Depending on the size of your account, if you have a small, medium, or large account, you can scale up or down depending on your capital requirements. Number 2, reason why I love this strategy is that it's very passive, guys. It requires a very low amount of time management for the strategy, meaning that you can have a full-time job or you can be on vacation or whatever you might be doing. It really doesn't require you to sit in front of the charts for 8 hours a day. 10, 15, 20 minutes per day should just do it. And number 3 reason why I like it, guys, a very high win rate. It's a very consistent strategy, helps build a lot of confidence, and the losses are truly few and far between. So with that being said, guys, in today's video, we have a couple things to take a look at together. Number 1, I'll be setting the expectations for the week. What do we have to look out for in terms of macroeconomic events that could move the markets? What do we have to look out in terms of earnings events that can move the markets as well? And lastly, just a very quick rundown of technical analysis. Now that we're at the all-time highs, where do we stand? Are we too overbought? Are we expecting a pullback? So we'll be going through the technical analysis of the charts and giving you guys my best impressions for the upcoming week at hand. Number 2, we're going to be going over the strategy rules, because obviously, as per any trading strategy, you need to understand the rules and apply them very well if you want to have consistency and a high win rate. So I'll be doing a very brief recap of the strategy rules. Thereafter, of course, we're going to dive into the top 5 options plays for the week. And as per usual, I always have a lot of bonus plays for you at the end of the video, 10 bonus plays to be specific. So make sure you stick around to the end. Without further ado, let's jump right into today's action, shall we? So in terms of the expectations for the week, guys, in terms of macro, it's going to be a very soft and light week. There's really not much to look out for in relation to last week, which had CPI, inflation numbers, etc., right? This week, really soft in terms of macro. Not much. Only the Thursday session, you have to pay attention to global manufacturing and services output. In my opinion, guys, not going to move the market that much. And you can see, right, no jobs data, no inflation data, and those are really the market moving events as of lately. So luckily enough for us, not too much. Where we do have a lot of possible volatility catalysts here are on earnings. Take a look at the sheer size and amount of earnings that we have on the board for this week, guys. Names anywhere from Domino's Pizza, Coca-Cola, Lockheed Martin, and then, of course, as we move further into the week, Tesla and Alphabet. I do believe that the 2 ones that are going to move the markets more so than not are going to be Tesla and Google on the Wednesday session. So keep that in mind. Monday or Tuesday should be very ordinary days, but when we're looking to go shopping to sell put options, it's important that we do not target any companies that have earnings this week, and possibly either companies that are sympathy plays to ones that do have earnings. Let me explain, right? If you were looking to play Pepsi, let's say, well, you got to be aware of Coca-Cola and Keurig Dr. Pepper, which is behind my big head right there. Sorry, it's right about here. So just keep that in mind, right? If you're looking for any short put plays, they can be affected by other companies in a common industry. So keep that in mind. All of the plays that I've selected for you guys kind of go outside of the realm of other names that might be reporting this week. So they should be okay in terms of any synergies or any sympathy plays, so to speak. So overall, most of the focus is going to be on pure price action because there's no macro catalyst to look out for. And of course, we probably don't have any new tariff announcements, as we know the deadline is August the 1st. Any tariff announcements could possibly be good news for the markets because at this point, all the countries have their effective rates established. So any news that might come out may not be a worsening of the established tariff rates. It may just be negotiations to make those rates a little bit lighter, which I do believe the market will appreciate overall. Now, if you take a look at our technical analysis, since we know that earnings are going to move the market, but we're not trying to play plays that are in relation to these earnings. And we know there's no macro. So essentially what I'm saying this week is it might just be a very normal week of price action. And let's take a look at the price action as a matter of fact. We know the SPY is currently up here at around the all-time highs. The daily higher lows are set at about 619. So the bulls are in control of this daily time frame right now. And in the event, for ever which reason the markets were to drop this week, just understand who is in control of the larger time frames. It is, of course, your bulls. Full control here on the weekly time frames for the bulls. Any pullbacks will, in my opinion, be a buying opportunity. Beautiful support on the SPY down there, 610 down to 601. And the Qs are the exact same thing right now. We are breaking above into new all-time highs, looking very good. A daily uptrend is underway. In the event you forfeit this daily uptrend and go into some form of extended consolidation for this week and to next week as well, just understand who are the long-term people that are in control. It is obviously your bulls, right? So any pullbacks right now looking for a higher low on the weekly, anything above 522, looking for a higher low. We have a beautiful retest location. Prior all-time highs used to be resistance, will now be support. As a result, if we do see some market declines, either in the indexes or individual names, I do believe all of those to be buying opportunities. So far, the macro has been good. So far, earnings have been very good. We got to hear from the banks last week and a few consumer-focused stocks. They are all pointing to the fact that earnings are very solid. The consumer is not in any forms of distress right now. So I do believe that any short-term volatility in terms of downside moves can just be tremendous buying opportunities. Couple that with the fact that the month of July is also seasonally one of the most bullish months of the year, only behind November in terms of yearly performance. I do believe that this month, any major declines, or rather short and quick form declines, could be decent, especially in the context of selling some put options. So that's everything for the macro preview and the chart preview. Hopefully you guys appreciated that. Now let's dive into some of the strategy rules. Now I'll be doing a very brief overview of these. As a matter of fact, I'll just give you guys the rules overall. I will link down below in the video description. Last week, I went through these rules again. I spent about 8 to 10 minutes on them. I won't be doing that this time because I'm going to try to save some time and make the video a bit shorter, but I'll link you down below to last week's video where I covered these exact same rules more in detail. For now, just take a screenshot and make sure that you're not forgetting any one of them. The most important one, guys, the most important one by far, do not write any put options on a company that you do not deem to be high quality or high conviction. Because what happens if you sell a put option and if you get assigned and you have to buy the shares, you are going to have to hold that company. So it may as well be a high quality and high conviction company, because if you ever own something that you don't truly believe in, the holding process is going to be quite cumbersome and may just take you into a little bit of a stressful situation. So you want to be certain that all the companies you're writing options are very high quality. But as I said, for a full description of the rules, and make sure you pay attention to these rules, this is what makes the difference between someone with a very high win rate and a very consistent win rate and somebody that's just writing these options willy-nilly and crossing their fingers. I will leave the video down below in the description. It's about 8 to 10 minutes, so you guys definitely have time to catch up on that. Now that that's out of the way, guys, let us dive right into the top 5 option space. And we're going to start off with number 1, which is going to be Walmart. So Walmart, there's a few key reasons why I enjoy playing this stock. Number 1, it's been consolidating now for the better part of the past 3 months above a very crucial area of support. Take a look right here, 93.5 down to $90. I do want to be playing these pullbacks. We had their earnings. The last time we covered them was in the month of May. Their earnings were very good. They were showing a capacity to absorb a decent amount of the tariffs. They weren't necessarily seeing a large consumer drop-off. And overall, I think they're through the fear environment that plagued the stock all the way back here in March and April. So I do want to play this support range. Seems to be a very good location to be going shopping for some possible Walmart shares, or just collecting some fantastic premium in the process. That being said, the volatility on Walmart is not the largest. You'll see the expected move right here is 93.53. Quick reminder, if you don't know where to find the expected move, it is on this website right here. You can always find it there, barchart.com. Type it into Google, barchart.com, Walmart, expected move, or whatever stock you want to see, expected move, and you'll come to this page right here. You want to be looking to the lower end of the expected move. Here you can see I have Chewy on the board, but if we go for Walmart, let's say, it'll show you the chart for Walmart overall, and you'll want to go with the lower price. You always want to be below the expected move. It just increases your chances of not being assigned. That being said, the expected move for the week is 93.53. Let's go shopping on Walmart to see what we can find possibly at the 93 strikes or the 92 strikes. And I'll show you right now, guys, the premium on Walmart is quite thin, meaning that we're not quite getting 0.5%. You guys know how I roll. I'm looking for 0.5%. What does that mean? That is my weekly take-home pay, my weekly ROI. How do I calculate that? It is half of the strike price in cent increments. So just divide this number by 2 in your head, roughly 45, 47. That's the amount of premium that you want to see at the strike you are interested in to make sure you're getting the proper amounts of ROI. Here we can clearly see that the 93 strike does not have the required amount of premium. It's actually somewhat low. So essentially, you know what needs to happen. You need to wait for Walmart to have a tiny little bit of a decline, right? Monday or Tuesday, if you see Walmart creep down into the 94s or high 93s, that is going to open up this play. So although it's not ready right now, it might be ready in the next 2 days, which is why I want to give this company to you guys. Fantastic company, high quality company. We just need to be a little bit patient on our execution for that entry. I played this one a few weeks ago when we got this big decline right there. I was able to get those exact same strikes. As a matter of fact, I got the 92s just by being patient and waiting for those red days. So if you guys are interested in this one, try to consider doing the same. Be a little bit more patient and you might be surprised. You might just end up with a 93 or a 92 strike early on in the week, Monday or Tuesday. That is going to be it for play number one. Play number two is going to be a semiconductor stock, Micron. And I've been very patient for this one, guys. If you take a look at the weekly time frame on Micron, we've had a phenomenal rally since the bottom. And now it's doing one thing that I like to play a lot, which is the breakout. Breakout of what? Breakout of a big resistance area. Breakout, retest. All of the major moving averages are in this little pocket. That pocket is 110 down to 100. As a result, since our longer term bulls are in control and we are just consolidating a little bit from this fantastic move, guys, bottom to top, this was a 108% move without much consolidation. We're finally getting a bit of consolidation and we have a lot of bulls that are sitting there to likely buy the dip. I was able to get this contract, guys, last week, and I was able to close it in one single day. On this decline here on the Thursday session, I wrote the 103s, and I was out of them for a very juicy profit, 70% in one single day. As a result, we'll be looking to do the exact same thing this week. The expected move for the week is 110.39. Let's see how far down into this zone we can actually get at the current price, or even if Micron has a bit of a slide on Monday or Tuesday. So let's pull up the options chain right here and we'll go shopping together for Micron below 110. As you can see right here, if I'm looking for 0.5%, half of roughly the 110-100 range, that's what roughly what? 50 to 55 is this number divided by 2. So that's how much we're going to be looking at the bid to make sure we get proper ROI. We can see right now that it's at 109. So not as deep as I was able to get last week, but still below the expected move. Now, that being said, in the event that you have a red day on the Monday or Tuesday session, pulling you down into maybe 113, 112, 111, well, you guys know what's going to happen, right? You're going to get the 0.5% rule. You'll be able to find 50 or 55 cents probably on the lower strikes. So personally, the ones that I'll be looking for is anything under 107. I want to play a little bit deeper into this support range. I don't want to play the top end of the range. I want to be deeper into it to give the bulls a chance to really start putting the buy pressure on as we dip into that location. You'll see they reacted nicely from the first touch. If you come a little bit deeper, I think the bulls will be accumulating some positions. As such, my preferred strikes for the week are 107 to 103. 109 is not a bad strike, but in the event I get a red day, I won't stay put at 109. I will drop because this premium right here will slide down. So be dynamic with your strikes, guys, right? Just because I'm saying 109 today, if Micron is down 1-2% tomorrow morning, maybe we can find the 107, 106, 105. Try and get as low as possible just to make sure that you're putting all the odds in your favor of not being assigned. But anything below the expected move is already starting off on a good foot. So that's stock number 2. Stock number 3 is going to be Apple. So Apple has been consolidating here for a long time. To be specific, if you take a look at the weekly time frame, it's been stuck in an accumulation range for the better part of the last 3-4 months since the tail end of the month of March. That being said, we are casually above our support area right now, which is roughly 206 down to 193. So Apple has an expected move for this week of 206.78, which is very close to our support range. That is where I want to be playing. And Apple has provided a couple opportunities on some red days throughout the week to actually play the lower bound down here at around 205. So that's the type of trade we'll be waiting for over the course of this week. If Apple can have 1 or maybe 2 consecutive red days, drop the price a little bit, maybe we can start playing into this very strong support area. I've made a lot of money playing Apple in this recent support area, guys, at different levels throughout the last 2-3 months. So we're going to keep it going as long as Apple is here, because eventually if Apple does get a bit of a rally and starts pushing, well, we can't really play this area anymore. So I'm looking to milk this zone for all it's worth for the time being, while we have a crossing of the weekly MACD and showing that the bulls are slowly regaining some price action, right? The expected move for the week right now is 206.78. Let's go shopping on Apple's options chain to find what can we possibly find below that 206.78 mark. Sorry, I'm going to pull up Apple right now, and we're going to have a look at the chain and see where can we possibly get. So 0.5%, if I'm looking for half of roughly low 200 range, I'll be looking for $1 in terms of premium, yeah? As we can see right now, the dollar in premium is roughly at 207.50. This is roughly 0.5%. That being said, 207.50 is slightly above the expected move, ever so slightly. Someone who's an aggressive bull would not mind playing that 207.5. Someone who's more conservative would possibly be waiting for a red Monday or Tuesday to maybe have the 205 strike unlocked. So for me this week, it's one of the two. If we want to be a little bit aggressive, and it's not even that aggressive, right? Because the support range is very close to that price, even if it does come down there. So if we get a sign, probably have a good time writing covered calls. And in the event Apple stocks drop, that'll free up the trade for people who are a bit more conservative. I'd be looking at the 205s. You'd need Apple to come down maybe 1% for that Monday or Tuesday. So 205, we'll be looking for roughly $1 in premium right there. So for me this week, it's one of those two strikes. And of course, in the event Apple starts off the Monday session down, let's say 2% for whichever reason, news headlines, whatever it may be, yeah? Well, be dynamic with the strikes, of course, right? If you see $1 or close to $1 at the 202.5s, well, then you're probably going to want to take that one and not stay firm at 207 or 205. So keep that in mind, guys. Always be dynamic with your strikes. Always try to get the lowest strike possible while still getting paid. You want to make sure you're close to that 0.5% per week rule. That's your take-home pay, so you may as well be greedy on it a little bit in terms of around that rule, right? The fourth stock right now is going to be e.l.f. Beauty. So e.l.f. Beauty, kind of the same concept as Micron. We had a ridiculous rally from the bottom, 157, 160% bottom to the top, and now we're just coming into an area of very healthy consolidation, right? It's a bit of a weekly slide and coming into backtest our prior support region, which is 105 to about $90. This area of support has been very solid for the stock overall, and the fundamentals of e.l.f. Beauty in or around the 110 area are actually quite good, yeah? The price to sales ratio is pretty solid. The PEG ratio is also not too high, and the company is growing extremely well in terms of revenue and EPS over the next few years. So I'm a big fan of playing all these pullbacks, but I know this stock is somewhat polarizing. Some people really like it, some people don't like it at all, which is why these options plays are just ideas, right? Feel free to not take this one if you don't like it, but if you do like it, maybe there would be something to consider here. That being said, e.l.f. Beauty was actually green on the Friday session by a big margin, by about 6%. However, we are still close to the support range. What I'm saying is if you get a bit of a red day, bit of a pullback here Monday or Tuesday, that might be the time to strike on e.l.f. Beauty. I played this one myself when we were down here. It was in last week's video as well. I was able to get the 99 strike. We might not be able to get that. We might not be able to get that this week. However, anything like 106 and below, I'd be a big fan of. And e.l.f. Beauty has some good premiums as well. You do not need to play it too close to the current market price. So the expected move for the week is 111.52. Let's go shopping on e.l.f. Beauty. See how far down can we actually get on e.l.f. Beauty on the options chain here. So roughly, if we're looking to play the lower $100 range, half of the roughly $100 range would be 55 cents. So let's go see where that premium actually is. As we can see, it's at the 107s. 107 is not bad. It's very close to the start of our support range. It is below the expected move, but if you have a red day, Monday or Tuesday, pay attention to it, guys. Maybe you can actually get a better strike than 107, talking about 105. So for me this week on e.l.f. Beauty, it's very simple. I'll just play the premium as it comes into my hands if the stock has a bit of a red day. I don't mind playing the 107s, but if I can get the 105s or better, I definitely will be playing those instead. So keep that in mind. In e.l.f. Beauty, you want to be playing the overall range, right? Try to get 105 or better as low as possible into the support range. That way, if you get assigned, well, at least you know the bulls are probably going to spend some time consolidating here. You have a good chance to write some covered calls before you might be able to make one leg higher, as the fundamentals do currently still support some expansion. There's nothing wrong with this company. That's trade number 4. And trade number 5 is going to be a smaller one. We're going to be talking about Chewy. So Chewy has not been featured on the channel for a while, as a matter of fact, since back here. That being said, the bulls are currently in control of this chart. The cleanest time frame for me remains the monthly chart. Very beautiful expansion on Chewy right now. It's looking very good. This is just a monthly higher low, and it's also a monthly breakout of a prior established resistance range. And now we're looking to backtest it as support. There's a lot of action down there in the high 30s. We got a lot of weekly moving averages, namely this 200 weekly EMA, which are now above. And the price action is not looking too bad. Keep in mind as well, the valuation of the company is pretty decent, around a 1.3 peg. They've been doing a really good job of improving margins using AI to target certain segments of customers in terms of recurring buys for pet products, improving margins, as I've already said, as a result of those efficiency gains. And I mean, look at the EPS. EPS is moving in the correct direction, and the revenue is also moving in the right direction. Nothing wrong with this company. They're actually a fairly big player in the whole pet space right now. So that being said, the expected move for Chewy, I've been very patient. I've waited for it to come back down, and come pick me up. And now might just be that time. So the support range is 39 down to 36. The expected move for the week is 37.90. Let's just call it 38. So let's go see, can we find something maybe in the mid 30s and really use some of these longer time frames, such as the weekly and the monthlies, to be acting as our gauge that the bulls are indeed in control, but we're now just in a slight consolidation phase with great fundamentals. So let's go shopping, shall we? Anything under 38. Let's pull up Chewy right now. So Chewy, taking a look at this list, you can see if we're looking for 0.5% in the high 30s, you'd be looking for what? Anything between 17 and 20 cents roughly for 0.5%. That being said, those are these two strikes right here, 37.5 or 38, both of which are indeed below. Well, 38 is at the expected move. 37.5 would actually be a good one. Keep in mind though, Chewy was up 3% on the Friday. In the event you get one more red day coming into the Monday session, that'll probably do it. In my opinion, you will be able to find some premium down here. 37, who knows, maybe even 36.5 strikes. So for me this week, guys, it's going to be 37 and 36 strikes. I'll be looking out for those early on in the week, Monday or Tuesday, off of any short-term declines, looking to play the heck out of the support area. And your 200 daily EMA is right down there at 36. And as I said, the longer-term bulls are in full control. So I do believe that most dips here will result in a buying opportunity as the bulls seek to possibly push this one a little bit higher. So that is your top 5 options plays for the week, guys. Hopefully you enjoyed that section. Now let's dive into the bonus plays, shall we? So I have 4 sections for the bonus plays. Number 1 is going to be some growth stocks. Now, all these bonus plays, it's not because they're not as solid as the top 5. It's just some of them are not quite ready yet, and other ones are just a little bit too volatile to make it onto the top 5, right? Some of you guys love that stuff, but other people prefer somewhat more conservative things. So in terms of the bonus plays, 4 sections. Number 1, some growth stocks. Number 2, some value stocks. Number 3, some accounts for stocks for smaller accounts. And number 4, some stocks for very large accounts. So let's jump into it. Okay, so number 1, the growth stocks, guys. Airbnb. Now, I'm not going to give you guys the expected moves for these. I'll just give you the levels because by now you guys are all professionals at finding the expected moves on your own. Airbnb, I like this one, guys. 133 down to 126. If we get an early week decline, sending us back down close to the support range, I would not mind playing Airbnb. It's been consolidating here for a very, very long time. Effectively, since the month of September, we've established some great support in this location, so I'll be looking to play a backtest of that level. Number 2 is going to be Bitcoin, BITX to be specific. Some of you guys love playing Bitcoin, but there's a safe way to play it. I'm going to be looking for possibilities of maybe clipping into the mid 50 range. Now, this is possible, guys. Last Monday, as a matter of fact, I was able to get those strikes down there. And I'll show you as a matter of fact, right? On this Monday decline, it was 62. I was able to get a 56.6 strike, which would tentatively be, if we're looking at the Bitcoin chart, that would be a back test of the previous highs that we just have broken out of 110, 111. So if I'm looking to play a pullback on BITX, I'll be looking to play the high 50 range. And here is the trade from last week. You can see here on the Monday, 56.5 for 35 cents, which was 0.5%. And we were able to ride that one almost into maximum profit. So any further declines on Bitcoin, I will gladly start playing that range again. Stock number 3 is going to be CoreWeave. So CoreWeave, Pay attention to this one, guys. It's not for everybody. There's a way to play CoreWeave, and it's not writing premium super close to the market and being very greedy. If you take a look at the CoreWeave options chain right here, you will see that the premiums on CoreWeave are absolutely insane, right? I mean, look, $400 for the 119s, $300 for the 116s. It's just too close. This stock can move 7-8% in a day, right? So be cautious on this one. The way that I like to play it is fairly conservative. I will go all the way down to where I can find 0.5%. And look, you could find 0.5%, which is roughly 50 cents on the 101 strike for Friday. That would mean that CoreWeave would have to drop effectively from here to Friday over 18%. So I'm trying to put all the odds in my favor of not being assigned. But even if I do get assigned on some crazy drop, at least I'm sure that I'm getting a much better price than if I were to just play super aggressive right here. And then I get underwater very fast, right? And underwater by a very large amount. So keep that in mind. That's play number 3. Reddit is going to be play number 4. Now, Reddit was a play that I did, scout out for a lot of our Discord members on the Friday session. Essentially, it's playing down here, 125 to 120. This as well is a breakout retest range. I'll explain. Very nice weekly chart. Any pullbacks are looking for a higher low, and the bulls remain in full control. So any pullbacks, sharp and rapid pullbacks on a morning will give you some entries. And the entry was there on Friday, but it might just turn up again. If it does turn up again, guys, pay attention to that 125 strike. It was available. All you have to do is keep it on the watch list, right? I'll show you what I mean. On Reddit, the 125s for this Friday, I'll go down to the options chain. There's good premiums here. If you look at the 125, keep that in mind. Look at the premium. You can see it right here, yeah? The early morning price was anywhere from 70 to 55 cents. That was roughly 0.5%. And by now, the trade is almost worthless. So it is worthwhile paying attention to these. You can get some good distance on them without taking too much risk. Those are the 4 growth plays. Obviously, there's many more, but there's 4 that I'm going to give to you right now. In terms of the value plays, 2 value plays that I want to focus on this week. Number 1 is going to be Nike. Nike for a few key reasons. Number 1, it's reclaimed a certain area of support right now. And any move lower, because Nike is now improving its fundamentals and is on its way to its recovery story, I kind of want to start playing some dips now on Nike, talking about the $70 to $68 range. It was prior support for most of 2024 into early 2025. And that's an area of price that we have not seen either since COVID or since 2018 prior to it being here. So I do want to play this location. We covered their earnings on the channel June 26th. Their earnings, although the numbers weren't fantastic, it did show a bottoming out process of the fundamentals and are now turning around in a favorable manner. So I want to play Nike as much as possible in this lower range. Value stock number 2 is going to be PayPal. The reason that PayPal is a value name and not a growth name is just because they're not growing revenue that much anymore, guys, right? PayPal is only growing revenue 6.5%. The new CEO, Alex Chris, has been very clear on this. He's not looking to grow top line revenue. What he is looking to do is grow EPS and do a whole bunch of buybacks with that free cash flow. So as a result, I do estimate that PayPal has reached a probably permanent bottom right now in the levels that we've established prior, talking about 68 to 58. So PayPal is still relatively close to this. If we can find some early week declines on PayPal, there was a couple opportunities. This candle right here, last Friday for the following week, same concept. If Monday or Tuesday or whenever we get some declines and we can find some strikes, talking about 69, 68, top of the support range, I would be a big fan of playing PayPal. Those are 2 value plays that I'm keeping a very close eye on for this week. Now, some plays for small accounts, right? Some plays for small accounts, you might be used to this one. This is Rocket Mortgage. So Rocket Mortgage, fantastic company and does have a lot of volatility. The first level that I want to play, guys, is this level right here, 13. I apologize, I don't have a box right there, but you can clearly see that something is going on at this level, yeah? It's either resistance for the bulls to get through it, and then when we get through it, you can see it has been considerable support. You got a lot of short-term daily moving averages down there too. And this one offers up an opportunity, seems as every single week, right? You'll notice here, I played it this past week. Where is it? Rocket Mortgage. I played the 13 puts for 19 cents. Got some good returns there. Prior, we played it again, 13 puts for July 7th. The weeks prior as well. You can find it all over the place in terms of Rocket. I can't find it now again, but I digress, right? The past 2-3 weeks have been pretty good in terms of farming premium for Rocket Mortgage. If I can find a $13 strike with a rapid decline at some point throughout the week, I would be interested in doing a $13 contract. You can argue that the larger area of support is down here at around 12. This is true. So if I ever had the capacity to do 2 contracts on RKT, well, if it comes down to 13, maybe I do 1. And if it breaks down below and heads down here, maybe I DCA by writing another contract at 12, which would give me a break-even price of right in the middle around 12.50, which is a lot more manageable to write covered calls and then get out of the trade. Fantastic company, in my opinion, looking very strong into a rate-cutting cycle. That's play number 1. Play number 2 is going to be SentinelOne. So SentinelOne is a cybersecurity company, and it's been doing okay recently. I mean, it's improving net margins, still not positive. As part of the cybersecurity niche, we know that these companies can stay unprofitable for a while as they scale revenue. It's a relatively small company compared to some of its sector peers, $6 billion. The stock price is quite manageable, and they are growing well, if I'll have to admit, right? EPS is now finally coming into positive territory. Been waiting for that for a few years. And revenue is also scaling very nicely. No real problems with this company, just has not gotten the same love as some of the other cybersecurity plays, but we can clearly see a fantastic area of support below us, which is roughly 17 down to about 15 bucks. So in the event that I see some rapid declines on SentinelOne early on in the week, maybe I can find some premium down there, $17, $16, decent range to be playing for a small account, right? For a fast-growing company in a very hot niche right now. And lastly, I got some plays for the big account holders out there. When I'm talking about big accounts, I'm talking about the people who can play stocks that have a price of $300 per share, $400 per share, and more because you have a very large account. Well, number 1, front and center, one that I've been playing for a couple weeks running right now, is Berkshire. Obviously, Berkshire has been somewhat out of favor, to put it lightly, right? That being said, Berkshire right now is in an area that it does not get to very often. It has now cut the 200-day EMA. If you put it on the weekly time frame as well, it has now cut the 50-weekly EMA. If we go back historically, other than the context of a big, full-blown out bear market and a global pandemic, has it been a good opportunity to play Berkshire under the 50 EMA on the weekly? Well, I'll just leave this chart here and you guys let me know. It can come below a little bit, sure, but it is a great location to play, especially when you're under as well the 200-day EMA. You're almost daily oversold as well. So I do not mind playing this one as well. The areas that I don't mind playing it in, 470 down about 450. This little pocket between the current support range and below, I think, provides some great opportunities for Berkshire, and I will continue to play it with my large account as well. Keep in mind, a lot of the times, guys, I don't do on my big account, I do also do 2, 3, 4 week contracts. If you are doing that style of contract, just make sure you're getting 0.5% per week or close to that to make sure you're getting some good ROI. And the other plays that I'll be scouting out for in my big account, guys, Visa and MasterCard. If we cannot buy Visa and MasterCard on some nice dips, what can we actually buy, right? So Visa and MasterCard, the level I'll be looking for on Visa is going to be 335. If you get a slight decline into there, that's been current support for a while. If you pull it out to the monthly time frame, you will clearly see who's in control of this area. It is the bulls. This is where most of the monthly candles have stopped other than our tariff disaster. It's the monthly 12 EMA. So I definitely will be playing a pullback on Visa. If I can find some good premium at the 335, I will definitely be playing that. It's close. It's almost there. 1 or 2 red days should bring you into, firing territory for those short puts. And MasterCard is the same concept, right? MasterCard looking into the 200-day EMA, which is about 535. Below that, we get support, 535 down to roughly 520. That is a beautiful area on MasterCard. Resistance in the past, support, other than the tariff disaster, of course. Support once again for the market a few weeks ago. If I can find some plays on MasterCard down there, I would love playing that consolidation, and it is the 12 EMA on the monthly. And if you look historically on MasterCard, other than a full-blown bear market or COVID, has it been a good criteria to play MasterCard at the 12 EMA? I don't know. I'll go back through the past 10 plus years. You guys tell me, right? So that's the 2 stocks that I'm looking at in terms of a credit card players. And with that, that wraps up all of the plays that I had for you guys today. So if you enjoyed today's video, hopefully you can drop a like. Would appreciate it for the growth of the channel. Consider subscribing as well. We do these videos every Sunday in preparation of the upcoming week. And lastly, if you have any questions on the strategy or you want some more detailed explanations, please leave your questions and comments down below, and I'll be happy to answer. In the event that you wanted to participate in our trading and investing community, where I trade a lot of this strategy, but I also trade many other strategies, directional strategies too, call debit spreads, leap call options, swing trade with shares. The link to our trading and investing community is down below in the video description. Of course, you get access to all of my trades in real time. Here's just a few of the these are weekly recaps, right? So here's just a lot of the trades that we've been making in the past few months. You'll see a lot of wheel trades, a lot of directional trades as well. The green check marks are win, the red little circles are losses. You get access to all my trades, and you also get access to our private morning live streams every Monday through Friday for 2-3 hours at the open. I trade live, but also answer your questions on your stocks, your options, your long-term portfolios. If you can't be there, they are always recorded. And you can also ask me your questions in our relevant chat rooms all throughout the day. I'm very fast to answer. You get access as well to our educational section, where I go through a lot of these strategies in detail, technical analysis, fundamental analysis breakdowns, how to build long-term portfolios, how to grow trading accounts, whether you have a small, medium, or large trading account, which portion of the trading account should be put into which strategy to get the best optimal gains, and many other educational videos of that nature. And you also, lastly, get access to all of my charts. You can copy paste all my charts. You can copy paste all of my watch lists, including my options watch lists that I use to find all these plays. And all my charts, I mean, you get all the support levels. They're all on the charts for you. And whenever I do earnings once per quarter on over 200 plus companies, you get the fundamental analysis too. So it makes your life a little bit easier. Just an added bonus for our members. So once again, if you are interested in that, the link is down below in the video description. So hopefully I see you in there soon. And if not, I'll see you guys right back here on the channel. Have a beautiful week in the markets. Hopefully you guys make a lot of profits. That's it for me. I'll see you tomorrow with the Monday market recap. Take care and peace.